You're watching the Penthouse Pod. I'm Yael Geffen, and we are with Nondomiso Kapai today, talking about buying your dream property, the ways to get there, the pitfalls, the mistakes that we make. We're here to educate and empower you. Okay, I'm a first-time home buyer, let's say. What is the journey? I know you're going to have feedback, I'm going to have feedback, but tell us a bit about the journey.
And I love it that we're starting with first-time buyers. It's such an important segment because we all go through the journey of a first-time buyer. The journey starts with the self, understanding your life stage, where you are, because that determines a lot of other things, what type of property you want to buy, possibly where you want to buy. But importantly, it's around affordability, right? Because it starts with that. It's a big transaction. In fact, it is the biggest transaction that many will ever make in their lives. And, you know, I always say it's important that you understand your own financial circumstances. And hopefully, you know, as a first-time buyer or an aspiring first-time buyer, you're doing budgeting. Because you have to understand, where do I spend my money? How much am I getting? Do I have surplus? Is there a shortfall? How do I save up? Because saving is equally important for a big transaction. But I also want to focus on the credit rating, because that is what banks will look at when they lend. And I'm not so sure how many consumers know that you get a free credit report, one annually.
No, when it's on our side, it's often the first time they've ever done it when they're purchasing a home.
Yeah, and it is so important, and I want to mention, because this also talks to where the industry is. There's so much available out there with regards to tools. And I want to focus just here with the first step, that it is so easy to get a credit rating report. And whether you're engaging through a bank or an estate agent, it is widely available. And the bureaus are there. I mean, through the bureaus, it's easy to access that information for yourself as an aspiring first-time buyer. I do think even within that step, and I'll talk about specifically what we offer as Absa Bank, a pre-qualification tool, which is widely available. It is on the website. And simply what that tool does in under 10 minutes is give you a view of what you're likely to get from the bank should you be ready to purchase a property. And again, it's really about putting in your income and expenses as close as possible to what it is, in actual fact, what you earn and what you spend. But also what we do as a bank is that we're able to then tell you as well what your credit rating is, so that you can make an informed decision as a first-time buyer. So that is an important step. Step one that I do think a lot of consumers need to spend a lot of time. The second one, and I love it, location, do your research, location. It is an important factor, where you buy. And you have got to do your research. But again, there's help out there. I mean, Yael, you know, through estate agents.
I'd love to touch on that, if you don't mind.
Please, yeah.
Because that's really where we partner with our clients, is advising them on that. And you know, location is really all about real estate and where you're choosing to live, and the value of the neighborhood. Is the neighborhood going to upgrade? Is it downgrading? Are you close to schools? Are you close to business nodes? Are there religious places of service there? Shopping centers, you know? And when I bought my most recent property, that is what I looked at first. And because it was an investment property, especially if you're buying an investment property, buying to let, that comes in handy more than ever. And as a first-time buyer, location really is more pertinent than ever.
You're so right, Yael. I couldn't agree with you more. I mean, it takes me back to when I bought my first property. And at the time when I was thinking about the location, 8 minutes from Sandton, all right, that's good. Easy access to the highways, okay, that's great. So that if I ever made a decision to let the property out, it would be attractive to the segment of the market that would want to work close to Sandton CBD, easy access to the highway. So location is so important. But again, life stage, right? I mean, Yael, you know, I'm a mom. When I bought my second property, there were specific things I was looking for. Security. And I was looking for facilities. Is it close to hospitals? Easy access to the school? Traffic? What does traffic look like in the mornings, etc.? So life stage tells you what things you need to consider.
Right.
So that you make absolutely the right decision for yourself and for your family. So that absolutely counts. But coming back to that second step around location, I do think, you know, estate agents sit with a lot of information as you advise and you guide. And I think we are so blessed to be in an industry where we've got such incredible experts that are able to provide that guidance around the area, what is coming in the area, maybe new developments, etc. That third step is really around now the property, and understanding the ins and outs of that property, and making sure that anything else related to that property you have a good understanding of. And I want to extend it to sectional title as well.
Just for our audience.
Yes.
In layman's terminology.
Yes.
Sectional title. Unpack what sectional title is.
And I'll keep it simple. Because sectional title is a scheme and it's managed by a body corporate. And within that scheme, a scheme has to run in a particular way, and there are rules around it, and you pay levies, right? As a customer.
Oh, I'm aware. I am aware.
A mistake that I once made in my property journey, where I didn't consider the cost related to
and how they go
to
up.
levies and how they go up.
And when the security improves, there's a new thing.
There's a new cost.
And the refuse and all of that.
And the refuse and all of that.
Sectional title.
Which is excluding rates and taxes, by the way.
Correct.
Yael, because that sits separately. But it is absolutely important to understand even the scheme that you want to buy into. What are the costs? What does it mean? What are the things that I need to think about? Is there flexibility for me buying into sectional title as opposed to a freestanding property? But I think let's delve a bit deeper, because Yael, you've seen it, where consumers buy a property and then they say, I wish I had known, this doesn't work, there's issues here, etc. Maybe you can help us also just to delve a bit deeper. What are those things that we should be doing when we're looking at the property that we want to buy?
Well, definitely our job as real estate brokers is to make sure the consumer knows everything about the property, any defects, any disclosures, and that's why using a professional, an astute real estate professional is very important, because these are certain things that you wouldn't notice yourself, and you know, you get all emotionally attached and your heart starts pounding and that happens. But what's interesting is I think a lot of the mistakes or perceptions get crushed a bit when it comes to the contracts.
Yeah.
And you know, when you sign those contracts, it's not like a dress. You know, when a seller signs that, if a buyer signs the offer to purchase and the seller has signed back, you know, put their signature on, it's not like a dress at YDE where you can go, you know what, I've changed my mind. I think I'm going to go for something else and bring it back. It's legally binding. And I think contractually, that's where a lot of first-time buyers get stuck, because they haven't considered a lot of the items that are in the contract. They're not reading the contracts. And I know on your end that happens as well.
No, absolutely. You're spot on. And that is where we say, ask the questions. Ask the questions, read the fine print. Equally from a bank point of view. But I want to talk about that in the last step, which is which is the actual transaction.
Correct.
Now,
Sorry, I jumped ahead.
But it applies, it applies. Because even with the offer to purchase is understand and read and make sure that you understand that it's a legally binding agreement, to your point with the example that you gave now. But as we get to the transaction, the costs associated with buying a property, it's not only your bond, or let's call it your monthly repayments. It's much more than that. It's where you and I spoke about the mistakes we made now around levies. If you're buying into a particular scheme, what are the costs? What are the monthly running costs? Rates and taxes, right? But even with the actual transaction, there are costs. The bond has to be registered at the deeds office. That has to be paid. There's also transfer costs to transfer the property into your name as a buyer. And the cost, all these costs add up. They all add up. Insurance costs, and I'm using insurance as an example. I know with the levies it's included in the levies, but if you're buying a freestanding property, you have to make sure you've got insurance. Banks will want to know that you've taken up insurance for the property. So all of these add up, and that is why when we go back to step one and we say it starts with the self, your own financial circumstances, your life stage, using the tools that are out there to understand what am I good to go for when I shop for a home. That as you add up all of these costs, that you will be able to afford at the end of the day. In fact, even with the rates going up, because the rates can go up, right? You factor that in. What happens if the rates go up by a percentage point or whatever the case may be? And hence we say it is so important to understand the journey of being a first-time buyer and the steps, because they're so incredibly important.
I think we're living in a wonderful era of empowering people to own their own homes, because there are so many tools, calculators available that never used to be there. And consumers themselves can actually work out their affordability, and with the help of a bank and an estate practitioner, a real estate practitioner, know what they're looking for. So I think now they're more empowered than ever, which really is great. One of the ways to also get to the banks is mortgage origination. And a lot of people out there, or our audience, might not even know what a mortgage originator is. And you work closely with mortgage originators. And I'd love you to explain their role and how you work with them as well, in order to empower the customer even more, and for you to remain as competitive as possible.
Absolutely. As a bank, because we centered around customer and how we deliver to the customer. And as a bank, we want to make sure that we are present at every touch point where customers need us. And I love the question around mortgage originator, because that is one touch point, right? And the role of a mortgage originator at the heart is to make it so easy to go to all the banks and get you the best offer, right? As simple as that. And we work a lot with mortgage originators. They're absolutely critical to our ecosystem. And we make sure that we remain competitive as a bank. As mortgage originators get you the best offer out of all the banks. I think that for me is number one. And of course, there's other sources and channels where customers or consumers can go should they need to access help for a mortgage.
I have a question.
Yes.
If you are an ABSA customer, is it a myth that you get a better rate? If you a private bank customer with ABSA, surely that lends itself to more negotiation?
Yeah.
Or is it something that's kind of standard? Sorry,
No, I love the question.
I hope I'm not tripping you up here.
I'm absolutely loving it, and I'm going to put it very simply. Let's say I'm the bank, and you're the customer, and you happen to already have a relationship with the bank, whether you have your transactional account, your savings account, whatever the case may be. The fact is the bank knows more about you as a customer. Naturally, in that circumstance, if we use that as an example, the bank is likely to give you a better outcome, right? Because they know so much about your financial behavior. And of course, as a bank, the more and more as a consumer, you expand the products and services that you have with the bank will reward you for that loyalty, right? And I'm going to use one very simple example, and I'll apply it to myself because we want the audience to really understand at the heart how these things work. We've got an ABSA rewards program, which pays you cashback. It's real cashback. And the rewards program rewards for that loyalty, right? The more products you have with the bank, and you put into a particular tier, and the higher your tier, the more you get back in terms of cash, right? So that speaks to loyalty beyond just being able to get a better rate as a customer, because the bank knows a lot about you. And I do it. I've got ABSA rewards. And at times we often joke around to say, actually, I'm using my rewards to pay off a lot of things. And a friend also said that I'm using my rewards to pay off my daughter's car, because the bank will reward you for being a client with them. So that covers that part of the question. I do think, equally important is, and I wanna make it very clear to the audience out there. There are so many propositions that the bank offers, particularly in lending, in mortgages. If you are thinking of repurchasing and having the transaction again with the bank, we do reward that with loyalty, whether it's discounts with attorneys or cancellation costs. We obviously cover some of that. Those are some of the ways in which a bank will reward for that loyalty as an ABSA customer. So it's not a myth. Yes. But I also want to underscore a very important principle so that we don't miss the learning. And I'll try and steer away from bank jargon. A bank will price. So in other words, the rate I give you also has to consider what type of customer you are, right? So often when you hear bankers talk about risk-based pricing, it's true. If you're a great client and you handle your finances very well, remember we're going back to your financial behavior, your credit history and all of that. If that is absolutely superb, of course you're going to look much better from a risk perspective, because as a bank, I lend money, right? So there is an element of risk-based pricing. But again, I want to layer it again also to say, if you do have a deposit, it makes it easier to negotiate a better price from the bank.
It does, and it also shows the seller that you in it, and gives them confidence as well. It really does. We normally say about 10%. What do you as a banks recommend?
So I would steer away from putting a fast rule to say it has got to be 10%. But the principle I want to put, of course, the more you're able to put down, the better it is for you when you negotiate. If it is 10%, I know it's a rule of thumb. If it is 10%, that's also great. But if you're able to save up for more, that's absolutely fantastic. I want to point out, and here I go back to why as a bank we focus on the customer. There are segments of the market that will struggle to save up for a deposit, and that is real, right? And as such, because we understand this particular segment, and I use that segment of the market as an example, we do more as banks to buffer that need that is there. And we do so by saying we will offer above 100%, right? So when you hear of banks talk about, we can actually give you 104%, 108%, it's usually done to cover those additional costs, right? For those segments of the market that just don't have a way of saving up for their first home. And I say it more specifically for first-time buyers.
And thank you for explaining that, because I think a lot of people don't quite understand 104%
What does it mean?
or 108%. Like, how can you get more than 100%,
yes.
you know?
Yeah.
But when you expand it to that, and there are all these hidden costs, you know, and you don't want, you know, it's buyer's remorse, we call it in real estate. And you know, you don't want to have that buyer that's now in a position with the bank, with the property, that thinks, oh boy, what have I signed up for? And we don't want them to fail. And as a bank, you don't want them to fail either. You want them to enjoy their purchase and feel confident and feel like they can afford it, and empower them. And we don't want any worst case scenarios.
Absolutely.